Good evening, everybody, and welcome to today's edition of Women and Money Montreal. My name is Lynn Sock. For those who are attending for the first time, or if you're coming from meetup.com, I do invite you to join the Women and Money Montreal community Facebook group. It's under the same name, Women and Money Montreal. That is where there's a lot more interaction, and I do a lot of summaries as well as post more tidbits than you would find on Meetup. So welcome again to everyone who's attending this evening. Again, if you're attending for the first time, basically it's pretty simple. One of the reasons why I created the Women and Money Montreal community was to provide a safe space, a non-judgmental, non-salesy environment for women in the Montreal area to learn more about money. So we do run these financial literacy sessions every Tuesday, 7 p.m., talking about different topics related to personal finance, investing, or real estate. We also host the Breakfast Club for Women Entrepreneurs, which is every Friday morning, 10 a.m., discussing different topics that affect entrepreneurs. We're wrapping up 2024. So tonight is actually, after tonight, we only have 2 sessions left. So immediately following this webinar, if you are here or if you're watching later on, you'll receive a copy of the recording via email. And you'll also receive a follow-up email later on tonight with a summary of some of the key points that we discussed today, and the links to register for the next sessions. During the session, if you have any comments, please feel free to write them in the chat, either comments or questions. They're more than welcome. And please don't be shy. Again, this is a non-judgmental environment. And the whole purpose, the whole reason why I created this group was to teach in a safe space. There's no stupid question, and chances are if you have that question, or if you're thinking something or not understanding something, I might be speaking too fast, and somebody else is probably has the same question but might be too shy to ask. So we spent the last 4 weeks talking about investments. I wanted to give it a break, as I'm sure many of you wanted to as well. Tonight we're going to talk about life insurance and choosing the right type of the right life insurance for you. I've done many insurance policies, seen many insurance policies over the years. I've both offered them in my practice as a solution, as part of a holistic financial plan. I've also personally had to settle life insurance claims, personally for family members after death. And I haven't had to settle a claim yet for a client, but I've helped people who became clients settle claims, and I'm actually working on 2 right now. Unfortunately, they're 2 different people who had loved ones pass away, and I'm helping them try to settle the estate and handle the death claims. So what I wanted to do is really focus on 4 of the most common questions that I get asked when it comes to life insurance. And again, if anybody has any questions, please feel free to pop them in the chat and I'll get to them as soon as I can. So the first question I get asked a lot is about the different types of life insurance. What are the different types? If you go online, if you ask friends or family, everybody seems to have their opinion about life insurance. I'm going to break it down very simply for you. There are 2 main types of life insurance. The first type is called term insurance. Term insurance provides coverage for a specific period of time and for a specific amount. It is the cheapest form, the least expensive type of life insurance. No bells and whistles. It's basically you are covered for this many years and for this amount. Life insurance at its very foundation, the fundamental purpose of life insurance is to provide a benefit to a beneficiary upon death. So term insurance is a good option if you just want to cover a specific need for a specific period of time and you want to be mindful of costs. Term insurance, once the term is up, nowadays, almost all term insurance policies have the option to renew and convert and extend. And whenever you do sign up or take a term insurance policy, you will know ahead of time how much your premiums will be at the end of your term. Now, if you're looking at today's dollars, so for example, if you decide to take a term 10 policy. So a term 10 policy basically means that you have coverage for the next 10 years. If you take that policy today and you just take a glimpse at what your future premiums are going to be in 10 years, in today's dollars, they're going to look incredibly expensive. Just be mindful that these are locked in rates, and it doesn't matter if you've had all kinds of health issues for the next 10 years. If in the next 10 years, when your term insurance is about to expire or up for renewal or coming to an end, if you are relatively healthy, non-smoker, you're not obligated to extend the specific policy that you have and to take that rate that's been provided to you. You could shop around and see what's available and potentially cancel that term insurance policy. So again, first type of life insurance, term insurance, it's temporary insurance that covers a need for a specific period of time for this amount of coverage. That's it. That's all. No bells and whistles. That's basically it. It's the least expensive form of life insurance. The second type of life insurance is permanent insurance. So permanent insurance, as the name suggests, it's for life, it's permanent. Permanent life insurance comes with more bells and whistles, and there isn't just one type of permanent insurance. If I want to break it down in the simplest definition, permanent insurance is basically life insurance with some type of cash or investments in it together, all under the same policy. And like I said, with permanent insurance, there are many different options. So you'll find many different price ranges when it comes to permanent insurance, and it all depends what the bells and whistles are. Permanent insurance is popular with many people because it offers that cash or investment portion. I would like to say, take a little caution to that, because is it a better option than term insurance because you have that savings portion? I wouldn't call it better. I wouldn't call it worse. I wouldn't call it anything. It's just that's what it is. So if you're trying to decide if it's better to take term or if it's better to take permanent, it really, really depends. Keep in mind that permanent insurance comes in various price ranges, and some of the factors that affect how much your permanent insurance policy or coverage will be, the cost of it, a lot of it depends on those bells and whistles. So as an example, I know that one of the companies I work with pretty much seems to have the least expensive permanent insurance. However, if I go from memory, their cash value or the cash portion of their policy, you don't have access to it until I believe the 10th year of the policy. So yes, on one hand, you have coverage for life. There is a cash component to it, but that cash you won't have access to until the 10th year. There are obviously permanent insurance policies where you have access to cash right away on your first year. Those are going to be the ones that are more expensive. And there are permanent insurance policies, all in between. There are some that have cash values or investments in them that starts from year 3, from year 5. It really, really depends. Some of you may have heard of something called universal life insurance. Universal life insurance falls under the permanent insurance category. It is a type of permanent insurance. And again, part of it is life insurance, and the other part is the investment portion. And you could actually invest the investment portion pretty much like you would a TFSA or RRSP. Again, caution. I've seen it sold, missold, or misoffered or misadvised to clients by advisors who don't act in their clients' best interests. So just to recap, the two types of life insurance are term and permanent. Term is for a specific period of time for this much coverage. That's it. That's all. Permanent insurance is basically for life. There's an life insurance portion. There's also some type of savings or cash portion. The premiums vary depending on the bells and whistles that you want included in your permanent insurance policy. And typically later on down the line, what makes it attractive is that you could either borrow against the cash value of the policy, you could cancel the policy altogether, and you could cash out whatever money is in there, or you could just keep the policy active for life. And then no matter at what age you pass away, your beneficiaries, your children, your loved ones will receive a death benefit. From this point, the one key point that I want you to realize is that one is not better than the other. They're just two different types of coverages, and which is better for you really depends on what you're looking for and what you need. Which brings me to point number 2. And I see some people joined in. If you have any questions, please drop them in the chat. I just went over the different types of life insurance, which are term and permanent. The second question I get asked often is, how much life insurance do I need? So when talking to clients, I try to avoid jargon as much as possible, and I try to just have that discussion. People have different needs, and whether you're a single, in a relationship, even if you have two people side by side, even if you have two couples side by side, doesn't mean that they have the same need. It doesn't even mean that the two people within a couple have the same needs when it comes to life insurance. It's possible for within a couple that both people disagree on the type of life insurance that they need. And I've seen this often. I've seen one spouse or one partner saying, you know what, we need permanent insurance, honey. And then when they turn to honey, their partner, the partner says, I don't want permanent life insurance. I just want enough life insurance to cover the mortgage. So it's quite possible that even if you're married or in a loving long-term relationship, the person that you're sharing your life with does not agree when it comes to what type of life insurance you need. So when I'm talking to people, again, I try to avoid jargon. I'll ask straight, I'm a straight shooter. If you die, if you were to pass away tomorrow, what are the finances that need to be covered? What money needs to be replaced? Money does not always have to mean salary. So a lot of times when we talk about life insurance, we talk about the income that needs to be replaced if someone were to pass away. If you don't bring in an income, or if you are not the higher income earner in the relationship, it doesn't necessarily mean that you have less value in the relationship. It's not just how much money you earn, it's what is the value of your life. I hate saying it like that, but that's what it is. How much money do we need in order to kind of replace your role in this relationship? In the case of a stay-at-home mom, for example, stay-at-home mothers, already as it is, sometimes go through moments when they don't feel valued because they don't bring a financial aspect, they don't bring home a revenue or an income. But if stay-at-home mom all of a sudden passes away and the surviving spouse, who is the breadwinner, has to raise the children and keep the house and manage everything by themselves, guess what? The surviving spouse is going to probably need to spend some extra money for childcare, for a service to pick up the kids, maybe someone to clean the house, maybe meal plans because they work long hours. These are other costs, even though it's a stay-at-home mom who passed away. If you want to put a value on their life in life insurance terms, there is a value there. So there's a cost because the surviving spouse is going to incur these costs that they didn't need to incur when stay-at-home mom was there. So I asked point blank, if I'm meeting with a couple, and I look at both of them, if we're to pass away, how much money would you need? And vice versa. In the event that I'm speaking with a single person doesn't necessarily have an immediate financial need, but they might want to cover future needs. What do I mean by that? Let's say I'm meeting with someone who's in their mid-20s, they just finished university, or they've just finished trade school. Maybe they're dating someone, or they're starting to become serious with someone. They haven't combined their lives together yet, but they're thinking about it. Maybe mom and dad is pressuring them to get life insurance because they had life insurance. They have life insurance growing up. And when you're young, you're hopefully healthier, you're younger, in better health. life insurance is less expensive. So even though you might not have a current need, you might want to protect a future need. In the case of, I've shared this in the past of my husband got married. We got married when he was much later on in life. He had life insurance in his 20s. After he finished university, he went into business. He took all the things. He took the life insurance, the disability, the critical illness insurance, and he was diagnosed with a form of cancer at the age of 25. And after he beat it, he decided to go on this you only live once path and canceled all of his insurance policies, not thinking that he was ever going to share his life with anyone in the future again. Mind you, he lived till his mid 40s. That's when he met me, and now we share a wonderful life together, except he's now uninsurable. So at the time that he had the insurance back in his mid-20s, he didn't really have a need, except for maybe the disability insurance at the time. He didn't really need the life insurance, but he was thinking that he was going to get married and have children. He was protecting a future need. After his cancer, he didn't think that he would be with anyone, that there was no need. He ended up canceling his policies, and now he just celebrated his 57th birthday. And I remember when we tried to apply for life insurance when he was in his late 40s, it was just way too expensive. He was a cancer survivor. He was also a smoker, not a heavy smoker, but smoker nonetheless. He was also diabetic, and he's a male. So life insurance is more expensive for men, as in general. You can have husband and wife who are the exact same age, exact same birthday. Husband is going to have the higher insurance premium because insurance for men is more expensive. So how much you need depends on what needs to be replaced financially if you're no longer around, if you're a couple. This includes mortgage, this includes raising the children, this includes extra childcare, this includes extra costs, this includes maybe time off that you might need. I know of a married couple, no kids, they're in their 40s, and they don't have a need per se. They both have a lot of assets, liquid cash. They both have TFSAs, RSPs, non-registered accounts, but they have life insurance because both of them have said that if something happened to either one of them, they would need at least a year off just to grieve and mourn, and hopefully that's enough. And that's their purpose for life insurance. So how much do you need is basically how much do you need? What money needs to be replaced? How much money do you need if your loved one, if your partner were to pass away? And how much do you think you would need based on future needs? Are you young and plan on having children in the future? Do you want to cover that need now since it's less expensive and you're still in good health and you're not a smoker and it's just financially going to be a better decision for you? Do I see any questions in the chat? No questions. Awesome. The third question I get asked often is, do I even need life insurance? So this goes back to my second question. Not everybody needs life insurance. I don't care what you might see online that everybody needs life insurance. Not everybody needs life insurance. Everybody needs to assess as part of their overall financial plan if life insurance is a need, but not everybody needs life insurance. So again, it's kind of similar, piggybacking off of question number 2, how much do you need? Do I need the life insurance? So depending on your situation, I'm going to ask you questions like, if you're a couple, if you were to pass away, partner number 1, I'll turn to partner number 2, what would happen financially? Would you be able to still pay for rent or pay for the bills? Could you cover the car payments? Could you take time off of work? Is there money there for funeral costs? Do you have enough money set aside to settle to close the estate? I'm talking about for notary fees and anything else that may come up. Can you qualify for your mortgage on your own if your partner were to pass away? These are the questions that I will ask to determine if there is a life insurance need. If you are someone with a lot of assets, like a lot of savings, a lot of investments, and perhaps a lot of real estate, let's say you have a lot of rental properties. And if partner one were to pass away, logically, you might take a look and say, well, you know what? If I ever needed the money, I would just sell some of my real estate. That's a good point. The follow-up question is, if you're selling rental properties, there's a capital gains tax that you'll need to pay. Now, some people are from the school of thought that if there is any capital gains to be paid, it's fine because I've made a profit on my buildings anyway. If that's okay with you, then that's okay. Then there might not be that life insurance need. That life insurance need would be to cover that help cover that capital gains tax. But on the flip side, if you tell me that if you ever needed money, you could just sell some of the properties, not knowing that there's a capital gains tax to pay, if I bring it up to you and tell you, listen, if you were to sell property A, the capital gains tax the amount of tax that you're going to be paying after the sale of that property is going to be about $75,000, $100,000 as an example. Maybe you won't sit well with that. These are personal decisions. I'm not going to be there to tell you that you need to cover it or not. Some people are from the school of thought where, you know what, it'll come out from the proceeds of the sale. Other people do not like that at all. So some people do not need life insurance, but you're not going to know unless you check off that list of what ifs. No questions. What a good group. Not that other groups aren't good, but just saying. And the last question that I have that I get asked is, what do I do with old life insurance policies? So it's been 20 years that I've been doing this. So as I go through the years, my clientele also gets older. So what I get a lot of right now are either people who are around the same age as me, who've had life insurance policies for years. I have a lot of clients who are women, they're single, they're in their 40s, 50s. And these are policies that they took out a long time ago before me, because probably their parents told them they needed to get it. What do I do with this policy? Do I really need it? And this always goes back to, the question of, do you really need that life insurance policy? If you're not married, who is this policy for? Now, it doesn't mean that you need to cancel it, but you need to ask yourself, would you like to leave a legacy behind to someone else? Do you have nieces and nephews? Do you have a community organization that you would like to name as a beneficiary of your policy? If the answer is no to all this, and there really isn't anybody that you'd like to leave this life insurance to, if you do meet someone later on in life and you're like, you know what, I'm not going to leave them any money, there's the possibility of probably reducing your coverage to a lower amount if maybe you want to keep a policy but maybe not as large. Or there's also the possibility, if you have a permanent life insurance policy, to cancel the coverage and cash out whatever investments or cash value that you have in there. Those are two possibilities. There's also the option of perhaps transferring ownership of a policy to maybe a charity. So one thing that people don't realize is that if you have a policy that's been in place for a while, and you're still in good health, but you don't have any need for it, you don't have any children, there are registered charities who are open, and these are the larger charities, by the way, that are open to buying your policy for you, from not buying your policy, but taking over your policy as the payer, as long as you name them the beneficiary of the policy. So this is something that's lesser known, and ideally it's for people who have these policies for a while and they just don't want to pay the premiums anymore. It doesn't make sense, but maybe you want to leave a legacy behind. Maybe you want to be one of those people who has a plaque at the hospital or a wing in a hospital named after you. This might be a way for you to donate the policy to somebody. What about life insurance that is bought at work? Does this carry over when you retire? Great question. It really depends. It doesn't automatically carry over. You would need to check with your current carrier to see what happens if you retire. There are some companies that have that option. There are some companies that have that option if you leave the company, not necessarily retire, but if you leave altogether. One thing to note about life insurance offered through employers, particularly if it's not, actually this applies for anybody. Group benefits tend to renew every year or every 2 years. I know this because I have a group benefits team, and they maintain their book of business, but there are a lot of group benefits companies that don't, because they don't provide good service. Employers renew their group benefits usually every year or every 2 years. And it's really at the discretion of the employer if they will keep certain benefits or not, or if they change benefits altogether. As an example, husband's a teacher. He's insured under the teachers union. Once upon a time, through his union, there was eye coverage for eye care for optometrists. Now there's no dental and there's no eye care. Why? Because at some point, and I don't remember when, at some point what was negotiated between the union or the employer with their benefits with the insurer, somewhere it was agreed that it wouldn't be included as coverage. So that's just one thing to remember. But it's not automatic if you retire, and it's not automatic if you leave the company. You'd have to check with your carrier. Any other questions? Yeah, so going back to what do I do with old life insurance policies? Again, it's important to review your old life insurance, existing life insurance policies to see if there's still a need there. Life insurance, financial planning doesn't stop because you did it one time when you were 27 years old. Financial planning continues for the rest of your life, and you have to kind of touch on all the aspects of financial planning, including if there is still a life insurance need. If you wake up one day and you're 52 years old and you've been paying into this life insurance policy for the last 30 years, and you're thinking that you have some type of cash value, but you've never looked at it since you first signed up for it, maybe now is the time to take a look at that policy to see if there's any cash value. I, unfortunately, have had the chance to look at old life insurance policies where people pay into them thinking that there's a large amount of cash value in it, only to find out that after paying into this policy for 20, 30 years, there's only about $600 of cash value. So if you are one of these people that have been paying into a policy thinking that, oh, it's okay, there's coverage, there's money in there, check. If you have not looked at your statements since the initial time when you signed up, check, please, because I know that even though we get a bad rap in the insurance field, it used to be a lot worse 20, 30 years ago. I've seen a lot of bad policies from 20, 30 years ago that I needed to replace, or there was just no choice. I couldn't replace them because the clients, the people that were insured, were just uninsurable now. So we couldn't replace it, and they're better off keeping that policy in order to just have some type of coverage because they wouldn't qualify somewhere else. So just to recap, different types of insurance: term, permanent. Term covers you for a specific period of time for this amount of money. It's the cheaper, the less expensive form of insurance. The other type is permanent insurance. It's a combination of life insurance with some type of cash or investment value, more expensive, and there are different bells and whistles that come with it that change the premium. So from one company to another, and even within the same insurer, you might have different types of permanent insurance at different price points. How much do you need? Depends on how much you need. So asking those basic questions without any jargon. You know, if spouse number one were to die, look over at spouse number two and say, what would you do financially? How far could you go without my income? And vice versa. What needs to be paid? If one of us were to die, could the other person afford the mortgage or the rent, continue to pay the utilities? What are the debts? Are there car payments? What about the children? You know, would the surviving spouse's quality of life change. Sometimes the need is just the simple fact of I've been married to this person for the last 30 years, and I can't imagine life without them. I'm going to need a year off just to grieve. I brought up the example of the married couple that I have, no children. They're in their 40s, mid 40s or so, and they took, and not that they don't have money, they have plenty of assets and they have real estate. But both of them said to me, I need life insurance because I'm going to need a year off, and I don't want to take it from my savings. And lastly, what do I do with old life insurance policies? Check to see if the need is still there and take a look at your options. Not everybody needs life insurance. Besides life insurance, there's also critical illness insurance, which we don't talk about enough, which upon diagnosis of a critical illness, it's a living benefit. So upon diagnosis of a critical illness, you receive a tax-free lump sum after 30 days after diagnosis. There's also disability insurance, which replaces your income in the event that you are disabled, whether it's short or long-term. This should be in conjunction with either employment insurance or anything that's offered through your employer. But I take that with a grain of salt because, as I mentioned before, when it comes to your employer, your group benefits, your health, dental, short, long-term disability benefits could change each time your employer renews their group benefits. They could decide to completely change the coverage. They could decide to go with a completely different insurer who offers less coverage, but it's a lot cheaper, thinking that it's better for the employees. Do you need to replace the amount you withdraw, and how much time do you have to replace it? Great question. I think you're talking about the permanent insurance. If we're talking about permanent insurance, generally speaking, you don't need to replace the amount that you withdraw from the cash value. What will happen is it's taken from the death benefit when you pass away. So if you are making a withdrawal, it's usually not 100% of whatever amount that you see there. And when I say the amount, I'm only talking about the cash portion of it. I'm not talking about the death benefit. Something I didn't realize until recently, and only because I spoke with a client and she was the one who brought it up. When you have permanent insurance, like I said, there is the life insurance portion and there's a cash value. So let's pretend you took out this permanent insurance policy 20 years ago. And 20 years ago, it was a permanent life insurance with a $25,000 death benefit. And if we're looking at it today, there's, $10,000 of cash value in it, as an example, which is a pretty lousy policy. But anyways, let's use that as an example. If today, looking at your policy, there's $10,000 of cash value in it, and the death benefit is $25,000. The amount that you have access to if you were to withdraw would be almost $10,000. So there's always a calculation made by insurance companies on how much of the cash value you could withdraw, and that is basically deducted from the total death benefit if you were to pass away. So if you were to pass away today and never withdrew money from your policy, your beneficiary would receive a combination of $25,000, which is the death benefit, plus the $10,000, which is the savings portion, so $35,000. But if you withdrew from your policy, then it's $35,000 minus whatever was withdrawn. That's the simple answer. So you don't need to replace it. Are there any other questions? You're very welcome, Maria. So like I said, we have 2 more Tuesday sessions remaining for this year. Next week, because it's a question that's coming up often. Oh, hold on. About whole life insurance. What are the common issues in these types of policies that lead people to want to cancel? I'm interested in getting a whole life insurance policy with a 10-year offset. I haven't obtained quotes yet, but I'm scared the premiums will be unaffordable. So, great question. The first question I would ask you is, why do you need a whole life insurance policy? So the reason I ask this is because unless you're in the industry, people don't normally say, hey, I need a whole life insurance policy. Usually people will ask me that because they heard it from somewhere, and I want to know what you think you're getting. What are some of the common issues with these types of policies? So the most common issue is that they're missold. So I don't know, I can't see you all, but I don't know if any of you have heard of the infinite banking concept or the concept of becoming your own banker. And basically, in a nutshell, what it is taking a permanent insurance policy and overly funding it so that there's a lot of cash value. And it sounds really great in TikTok videos. And it actually is, it's basic. It's been around for a long time, but it's packaged and called the infinite banking concept. But what it actually is, the ingredients of it. Oh, it is the infinite banking concept. See, I'm so smart. So it's basically an super hyper overfunded permanent insurance policy. And what that means is that there's big premiums on it, like big. I mean, I do this sometimes, and I don't call it infinite banking, by the way. Infinite banking is a trademark. It's just marketable. I do it depending sometimes for corporations, and we're talking about premiums a minimum of $30,000, $40,000, $50,000 a year. And it's very rare that I do it because there are usually other solutions that are much better that probably have nothing to do with permanent life insurance. So the infinite banking concept is basically an overly funded permanent insurance policy that's become popular in the US, and I know it's coming up here. So my question is always, why do you need whole life insurance policy? Because it's not something that you say at a cocktail party. Nobody says, hey, I want a whole life insurance policy. Somebody probably tried to sell it to you. And so the first question I would ask you is, why do you need it? Life insurance always goes back to a need. If you're looking for a way to accumulate wealth, you have to go to the basics first, which is the TFSA, possibly the RRSP, maybe even go the non-registered route. If you don't really have a need for life insurance, we need to make sure that we've looked at all other more flexible options than tying in all your money into a whole life insurance policy when it doesn't need to be. So that's what I would say with that. It's missold, and oftentimes it's missold and misadvised by my industry because it's a higher commission. Between me and you, everyone who's watching, everyone on YouTube, because this is appearing on YouTube, it pays a good commission. So same amount of work, same amount of time, but the commission's higher. I've seen it offered to clients poorly. The example that I gave before is someone who's paying into a whole life insurance policy for the last 20, 30 years, thinking that they have cash value, but really all they have is $600. That's the perfect example of that. So it's, what's your need? What is your life insurance need? And what are you trying to achieve? Forget the jargon for a second and just tell me what you're looking for. And let's see if there are other more flexible, reasonable solutions without jumping the whole life insurance or infinite banking routes. Ultimately, I want to opt for a whole life insurance policy so I could borrow against it and use the loan to buy more properties. Again, you need to be able to afford the $30,000, $40,000, $50,000 a year premiums for a few years before it could happen. You need to have that amount of cash value in there. And the amount of cash value that's in a life insurance policy is in relation to how much life insurance you have. So the first thing you need to do is be able to qualify for life insurance. So being, non-smoker, be in a reasonable amount of health, and it's not an unlimited amount of cash or investment that you could have in the life insurance policy. It's always in relation to the life insurance. So that's what I would say. I really hate the infinite banking concept. They just have strong marketing and salespeople. And I did a session on it last year. Not that it's bad, but 99% of people could go another route without having to go the infinite banking route. So Jackie or anyone else who's listening, if you've been approached by someone who's telling you that infinite banking is the next best thing since sliced bread, we need to talk, reach out. There are other ways to go about it, and you need to check off all the other boxes before jumping on something like that. Any other questions? You're very welcome. So like I said, there are 2 more sessions left. Next week is the question of the day that everybody's been asking me. What's going on with the dollar? What's going on with the Canadian dollar? Why are we going low? What's happening? People are asking me about recession here in Canada. Is it Donald Trump's fault? Did it have anything to do with Justin Trudeau visiting Donald Trump on Friday? All kinds of things. So that's what we're going to be going over next Tuesday. And then in 2 weeks is the other question that people ask me, which is it now the time for a variable rate mortgage? So in 2 weeks, we'll have, by the time we meet again, it'll be right after the final rate announcement this year from the Bank of Canada. So whether it stays put or goes down again, which it's expected to go down probably another 0.25%, people are asking, is now the time to choose a variable rate mortgage? I'm going to go over that checklist and what to ask yourself before choosing a variable rate mortgage, and is it the right solution for you? If anybody has any questions, if you would like to look over life insurance options, either for yourself, for your children, your grandkids, or critical illness disability insurance, please shoot me an email. We could go over the different options, why choose one over the other, and basically what your needs are. Again, life insurance is just part of your entire financial plan. And as life goes on, there may or may not be a need anymore. So if you're also somebody who's had life insurance for a while and don't know if you should keep this policy, we should also talk and see what options there are. Or if it's just better for you to let go of your policy, that's also an option as well. So to everybody who's joining in tonight or watching the replay later, thanks so much for attending, and you'll receive an email shortly with the links to register for the last 2 sessions of this year. So have a great night, everybody, and I'll see you all very soon.